because today there's always been a talk about monetary and fiscal policy coordination. In my opinion, that's being lip service. Today we have it here in reality. So, Mr. Minister, you're very welcome here today. To our audience here, I wanted you to take advantage of this opportunity so that after the reading of this communique, you can engage with us, ask any questions, any burning issues that you think are relevant to your constituents. So, without much ado, I'll welcome you and open the floor. So, the next item here will be introductory remarks by the Executive Governor of the Central Bank of Liberia.
Thank you, Francis. Honorable Augustine Gafwa, the Minister of Finance and Urban Planning of the Republic of Liberia, members of the Monetary Policy Communique of the Central Bank of Liberia, deputy governors, and members of the senior management team of the Central Bank of Liberia, and members of the Liberia Business Association, the president and members of the Liberia Chamber of Commerce, the president and members of the Liberia Marketing Association, the president and members of the Women in Cross-Border Trade, the president and members of the National Forest Bureau Association, members of the academic community, members of the private sector, members of civil society, members of the Fourth Estate, distinguished ladies and gentlemen. Good morning, everyone. On behalf of the Board of Governors of the Central Bank of Liberia and the Monetary Policy Committee, let me welcome all of you to the premises of the Central Bank of Liberia. Thank you again for attending today's reading of the Monetary Policy Committee communique. The MPC plays a critical and important role in the formulation of the monetary policy decisions of the bank that are aimed at promoting price and financial stability in the Liberian economy. Our purpose of inviting you today, this morning, is because the decisions that we make here are intended to build upon and improve what you do, improve the general livelihood of the ordinary people and the general business environment. The MPC communique, which we'll be reading and issuing to the public this morning, reflects the decisions of the committee following its 23rd regular meeting held on July 16, 2025, and our commitment to transparency and accountability. During the meeting, the committee evaluated recent economic developments and assessed the risks to the inflation, exchange rate developments, and the growth outlook. Today's reading of the communique will transmit key decisions reached by the MPC after thorough deliberations and data analysis. Ladies and gentlemen, we are honored today with the presence of the Minister of Finance of the Republic of Liberia, the head of Liberia's fiscal authority, with whom the Central Bank of Liberia, as the head of Liberia's monetary authority, collaborates very closely in addressing the present challenges of Liberia's financial ecosystem. While the Central Bank of Liberia is charged with the primary responsibility of achieving and maintaining domestic price stability in the Liberian economy by formulating and implementing the monetary policy of Liberia, the CBL cannot achieve this feat without the collaboration of fiscal authorities. We are also honored today with the presence of heads of commercial banks, with whom the CBL, while providing regulatory oversight, works very closely in the transmission of our monetary policy decisions. Mr. Minister, ladies and gentlemen, we are continuing to work closely with our mobile money operators for a seamless mobile money operation in the country via an integration initiative as a step closer to the launch of the National Electronic Payment Switch. Ladies and gentlemen, a 24 hours open economy is possible, and at the CBL, we are achieving the economy is also possible. We therefore want to call on all our partners, the commercial banks, the mobile money operators, the fintech, to support us on this journey. We want to encourage the commercial banks to move on with the development of mobile apps that will help make banking more easily accessible. We want to see more commercial banks encouraging their clients on the PAPS platform that promotes inter-regional and inter-African trade that will significantly reduce the demand for US dollars and by extension the exchange rate pressure and support our long-term strategy for the ultimate de-dollarization of the Liberian economy. Let me end these few remarks by re-emphasizing that we can achieve the impossible by working together, and by quoting the late South African President Nelson Mandela when he said, "It always seems impossible until it is done." Thank you very much for coming to this very important occasion this morning. Thank you.
Thank you. Thank you, Governor, for those very thoughtful words. With that done, I have the opportunity again to invite our distinguished guest in the person of the Honorable Minister of Finance to give a few introductory remarks. Honorable, you got one?
The Honorable Executive Governor of the Central Bank of Liberia, Honorable Henry F. Samoa, Deputy Governor James Whitfred, and top members of the Central Bank Management Technical Staff here, President of the Liberia Bankers Association, President or head of the Insurance, is it Brokers Association? Insurance Association. You will get things right. And that others who are strong stakeholders, not only in the management of the economy, but the success that we achieve or that we aim for in the economy. And I will be remiss if I didn't give a special recognition to the President of the Liberia Bank for Development and Investment, that's Mr. Allison, Chairman of the Board. I don't want him to call me to the corner and say, "You recognize everyone." He didn't recognize me. We're good friends of the Food Festival. For me coming here is always somber because it is like coming home. The central bank is home to me in a lot of ways. When the central bank was established, from the transition, after the transition from a national bank to a fully independent central bank. We had the honor of being hired in a meritocratic manner by the then Governor Edie Salivey. And I came in as a technician, a bank examiner in the supervision department. And I see some of my colleagues changing. And I'm appropriately flanked. And so I come, I see brothers, I see sisters in a professional environment. This place has always been a place of merit, a place of honor. And that we even now produce the president of the Liberia Bank for Development and Investment. You know, another central banker. The central bank is critical to this economy. One of the things that I reflect on was that when I came from graduate school in 2004, when the late Governor Charles Green had the reins here, and I was placed as a professional trainee in his office for almost 6 months. I was working with the governor of the central bank, and I needed an office, but he said no. He had me right in his office in the corner. And one of the things I did was to sit in meetings of the Monetary Policy Communique, and giving him some advisory notes and also learning. So today, if I can come on the fiscal side, you can invite me here in an act of transparency, because I'm told it's been a long while since this kind of open forum to put out or communicate on monetary policy have been held. So let me congratulate you, Honorable Governor, and the team, the board, for this. This shows that we recognize that we are not perfect men and women. We come in humility. We come to hear from our people, and some of the decisions that the Monetary Policy Communique has arrived, on, are all informed by the concerns that we all, led by the President, are seized with to address the issues, to develop this country, and to take Liberia to a different level. The Central Bank of Liberia and the Finance Ministry, Finance and Development Planning Ministry, we are like Siamese twins. We are responsible for this economy. No matter how well we work, if we do not have the support of the central bank, we will fail. And no matter how well you work, if you do not have our support, you will fail. So our destinies are tied together. And the coordination between the Central Bank of Liberia and the Ministry of Finance is excellent under your able leadership. And let me say something, and I will say this publicly. I've known your governor for the ages. I've known him. We were in school, and he was a man of excellence. And during those years, he was a permanent fixture on the principals list. When the honorable list at the university was put out, if you didn't see the name Henry Samuel, then you know that it was an error. He was a permanent fixture. He's a man of excellence. And his stint in the banking sector for those years, the RB Bank. At one point, let me confess, in my former life as Minister of Finance, I wanted to snatch him from RB Bank to bring him in the ministry. I had succeeded with John B.S. Davis at LBDI. RB got to know my intention to put a rescue strategy. I've known men of excellence in the classroom. There's a difference to have people of excellence in the classroom than people of excellence in the workroom. And you can also be a man of excellence in the classroom, a man of excellence in the workroom, but government is a different cookie. There have been people who have been excellent in the classroom, the workroom. When they come to government, they fizzle out. They don't understand how to hit target, sometimes within the chaos that government brings. But I have been personally very impressed. I said it candidly, truthfully, with the seamless transition of Governor Samuel into central government, into government, a tough place where, you know, sometimes some people call it a dog-eat-dog environment. But I've been impressed watching the seamless transition. I've been in meetings locally, internationally, where I've seen his brilliance, his diplomacy, his tact, and the poignancy of his argument, helping us to make a strong case for Liberia. And then it appears like he's being government oil when it's just about, yeah, you know. So I'm impressed. I need to say that publicly. So let me say that we support the central bank, and we will continue to be strong partners of the bank. There are a lot of things that we do together. A few months ago, I led a team, went to the National Food Authority. We decided to have some conversation with stakeholders at the port. And we had everyone there, Minister of Commerce and others, but the brokers and traders and business people. And one of the things that came out was the delay in clearing goods at the port and the need to take action. And it became evident that one of the stumbling blocks to that is that we don't have a 24-hour payment system in the country, because the port at the time, I think, was closing its work hours, I think, at 4 o'clock or a little sooner than that. The question was, how can we ensure that people clear their goods quicker? At least the port has taken some action. We're talking about night services, but it's still not as efficient as we wanted, because the payment architecture, where someone can pay and clear things quickly, hasn't been fully operationalized. So the payment switch is very critical. But I've been in meetings, even at the level of the World Bank, with the governor, ensuring that the timeline of delivery of this project, almost 2 years, was truncated. The governor was clear that we need it and we need it now. The governor will support you on that because once we achieve this, it will do wonders in a lot of ways. Because every time, it's not just for the poor, but just using the port as an example, delay of the clearing of goods in the port has an impact on the economy because the mortgage is charged to importers who pass on the costs to consumers. So we are working in a lot of ways. The central bank is doing a lot of things, we're doing a whole lot. The net effect is to make sure that we leapfrog. We are facing challenges, but we are still hitting target. People wonder how. It's because we in the government, led by the president, we are not only men and women of thought, we are men and women of action. We are ratcheting delivery. We are looking at all the bottlenecks and making sure that we move faster. So on a lot of fronts, many things are happening. And people wonder why. It's because of the execution mentality. The president has, and we all as government have imbibed. We must execute. We must deliver. And we must deliver on time. There's an urgency out there. And so we cannot afford to sleep behind the wheels. So Mr. Governor, and the team, let me congratulate you again. We will need to take some complementing actions on our side, and we've been taking in the spirit of discussions. We'll continue to backstop the central bank. An independent central bank is what we need. We, as the fiscal authority, we don't have the independence that you have. But your independence helps the economy. The president, the Ministry of Finance, and the entire government support that. To continue to do what you do best. At the end of the day, it is not just big policy statements. We are trying to impact on the lives of the people in the villages, in the streets, in the schools. It is changing their lives that matter. And we all need to track that. We need to listen to their concerns and take actions to make sure that the economy is not only on an even keel, but as much as possible, we are not leaving anyone behind. So, thank you again, and God bless your team. Thanks to others in the banking system, the Bankers Association. I was saying that we are Siamese twins, Central Bank and the Ministry of Finance. But no matter how close we can be, if the banking system does not support us, we will fall remarkably. So we need them because their efficiency is good for us. We started a meeting with the Bankers Association last week. We may want to have another meeting next week where we want to drill deep on what we can do better to make sure that the banks are enabled to support us better. But let me say thanks to the banking system. You all are developing packages, programs, and schemes to help our people. And I would be remiss if I don't note the positive appreciation we have about the introduction of the Pan-African payment settlement system. I was at the launch, and that was remarkable. The need for foreign exchange to transact business has been one of the pressures that have been having some, not so helpful effect on the exchange rate. But besides that, the inconveniences our traders go through. The fact that some trader in Liberia wanting to purchase goods in Ghana or Nigeria does not have to purchase or does not have to use US dollars, can come to a bank in Liberia and then pay for their goods and services in those countries. They don't have to physically carry money. We subject them to risks on the road, is quietly revolutionary. And I heard the testimonies of common people, market people. We need to market this more. Those little things that are changing the lives of our people, more people need to be aware so that they sign up to the services. And that when the payment system, the switch system is on, I know very soon, our entire revenue collection system will go up. So I extend regards from the Commissioner General of the Liberia Revenue Authority. He is praying and fasting that this thing comes on quickly. And the entire government, which is you, Mr. Governor, and the team, well. Thank you very much, and congratulations.
Thank you very much, Honorable Minister, for those words of inspiration. And we thank you also for the assurance you've given to us here at the Central Bank about the partnership working between the bank and the Ministry of Finance. With that, we are always going to be on the upward trajectory of the economy. We also thank you for the very kind words of our governor. What we do thank you for is that he didn't snatch him away from the IB Bank. Had you done that, we probably wouldn't have had him here as the executive governor. So now, for the real item, the high point of this event, which is the reading of the Monetary Policy Communique, I will now invite the executive governor to read the policy document, the monetary policy decisions that will guide this bank for the next quarter. Governor Samoa.
Thank you, Francis. Thank you, Mr. Minister, for your kind words and your assurances of collaboration with the Central Bank as we steer the affairs of the Liberia economy, and also for recognizing the Liberia Bankers Association. I said to the President, Mr. President, we owe them a debt of gratitude for managing the situation early on this year. And so, again, I just want to join the Minister of Finance to thank you, the Liberia Bankers Association, for working along with the Central Bank in the transmission of our monetary policy decisions and supporting the economic growth of the country. Having said that, let me move on to the task assigned to me today, which is the reading of the communique. And it says Central Bank of Liberia Communique number 23, July 23rd, 2025, for the Monetary Policy Committee meeting held on Wednesday, 16th July 2025. The Central Bank of Liberia CBL Monetary Policy Communique convened on July 16, 2025. The committee reviewed recent macroeconomic developments and assessed the risks to the inflation, exchange rate, and growth outlook in both the domestic and global economies for the second quarter of 2025. Following the deliberations, the committee decided to maintain the monetary policy rate at 17.25%. The summary below outlines the key discussions that informed this decision. On the global front, the global economy continues to slow down, caused by heightened trade fragmentation, rising debt vulnerabilities, climate-related disruptions, and geopolitical shocks. In its April 2025 World Economic Outlook, the International Monetary Fund, the IMF, downgraded its growth projection by 0.5% to 2.8% for 2025, lower than the 3.3% recorded in 2024. Similarly, a subdued growth for 2025 was also projected by both the World Bank and the Organization for Economic Cooperation and Development, the OECD, reflective of deep-rooted productivity slowdown, weakened investor sentiment, tight financial conditions, and geopolitical shocks. Although the risks are moderating, the committee noted that the constraints in the global economy continue with cyclical balances, policy trade-offs, rising fiscal vulnerabilities, and regional divergences in inflation outcomes. While advanced economies are cooling off under the weight of tight monetary policy and fiscal drag, many emerging markets and developing economies are showing greater resilience, particularly those with large domestic demand bases and improving macroeconomic policy framework. Moderation in global headline inflation continues, but the rate of deceleration remains slow. The IMF projected global inflation to moderate to 4.3% from the 5.7% recorded in 2024, reflecting the effects of subdued global commodity prices, normalization of global logistics, and tighter monetary policy settings across most economies. Core inflation, however, remains persistent in many economies due to strong wage growth and service sector price pressures. Moreover, inflation rates persist, particularly in emerging markets and developing economies, largely due to currency depreciation, commodity price volatility, and climate-related supply disruptions. The committee was, however, optimistic about the projected moderation in global headline inflation in response to policy effectiveness, particularly in advanced economies. Nevertheless, it was noted that the double-digit inflation rate in sub-Saharan Africa was mainly driven by fiscal pressures, climate-related supply shocks, and monetary policy transmission constraints. The varying movements in global commodity prices were also observed by the committee. It was noted that the international prices of rice and crude oil are predicted to decline. Similarly, the prices of rubber, cocoa, palm oil, and iron ore are predicted to fall in the quarters ahead. However, gold price is predicted to continue its upward trajectory, supported by strong global demand amid ongoing global economic uncertainties. On the domestic front, the MPC was satisfied with the quarterly performance of the economy, noting a 4.3% expansion from the 3.9% expansion in economic activity in the previous quarter. The committee noted that this expansion was on account of a rise in reserve money and a moderation in consumer prices. The committee was optimistic that at this level, the economy could reach its projected annual growth target of 5.6% for 2025. The committee was satisfied with the moderation in consumer prices in the economy, noting that inflation moderated to 11.1% in the second quarter from 12.5% in the first quarter of 2025. This moderation, the committee noted, was merely on account of decline in food prices, administered prices, and market prices. The committee observed that inflation forecast of 10.3% with a bandwidth of plus or minus 2% for the third quarter still points to the moderation in consumer prices. However, the MPC was concerned that the current global uncertainty with declines in the prices of most of the country's export commodities will have adverse implications for sustaining the moderating trend in inflation. Notwithstanding, the committee remains optimistic that proactive monetary policy action, including the current type monetary policy stance, will be helpful for safeguarding economic stability in the quarters ahead. In the banking sector, the committee noted that in the second quarter of 2025, the banking sector remained broadly stable, capitalized and liquid, despite a marginal decrease in the liquidity ratio. The capital adequacy ratio is estimated to grow to 31.5%, 21.5%, well above the regulatory minimum of 10%, while total assets, total deposits, and total loans and advances are also estimated to rise during the quarter under review. However, the committee noted that non-performing loans remain a significant financial stability risk, with estimated growth of the NPLs exceeding the bank's tolerable limit of 10% by 16.7 percentage points. The committee is, however, hopeful that the recent implementation of the approved NPL resolution framework will help to bring the NPL levels to below the tolerable limit. Monetary aggregates and financial markets development. The committee noted that the 7.3% estimated increase in net domestic assets, observing that this rise was on account of a 12.9% growth in domestic credit. The MPC also noted that the 2.6% rise in currency in circulation to 35.1 billion Liberian dollars, reflecting the estimated 3% increase in currency outside the banking system. Notwithstanding, the committee maintains that these changes were not significant enough to disrupt the relative macroeconomic stability. The committee welcomed developments in the financial markets operations and acknowledged that activation of the corridor system transmission mechanism is a strong indication that the policy rate is gaining traction. The committee noted that the 6% rise in CBL bills issuance was on account of a 7% rise in institutional investors' subscription. It was however noted that retail investment in the CBL bills fell by 4%. The committee expressed concerns that the upcoming festive season could have implications for the potential reduction in CBL bills subscriptions, but remain optimistic that any resulting decline will be temporary. The MPC noted the movements in the interbank market of 15 swap transactions, totaling US $32.55 million, and 8 placements valued at US $3.74 million, emphasizing that these developments are crucial for enhancing monetary policy transmission. On the fiscal development side, the fiscal operations of the government during the quarter showed net injections in both currencies. The committee noted that although the net injection of Liberian dollar liquidity contributed to the money supply growth, it did not distort stability in the economy. The US dollar injection, after accounting for debt repayment, to some extent also helped to mitigate the exchange rate pressure. On account of external debt repayment, the fiscal impulse of government was slightly negative at negative 0.14% of GDP, despite an expansionary fiscal stance of 2.1% of GDP. The committee learned that due to these developments, the government fiscal operations did not subject the economy to further exchange rate and inflationary pressures. On the external sector side, it was noted during the deliberations that the merchandise trade recorded a deficit widening by 35.9%, which is 3.8% of GDP, largely driven by the 23.4% growth in merchandise imports payments, despite the 19.2% increase in merchandise export receipts during the quarter. The committee also noted that the gross international reserves grew by an estimated 2.01% to US $537.2 million, mainly due to rise in foreign liquid assets. However, the months of import cover fell to an estimated 2.1 months on account of the growth recorded in import payments during the quarter. The NPC noted a rise in personal remittance inflows by 11.4%, including remittances terminated to mobile wallets to US $236.5 million, 4.6% of GDP, expressing satisfaction that the growth in net remittances helped to relatively ease the pressure on the Liberian dollar during the quarter under review. The committee also noted that the Liberian dollar remained broadly stable against the US dollar during the period under review. The committee was optimistic that strengthening collaboration with other stakeholders would complement the bank's tight monetary policy stance. Finally, NPC decisions. At the end of the deliberations, the committee acknowledged the decline in consumer prices during the quarter and the moderate inflation forecast for the third quarter of 2025. The committee noted that the moderation in global headline inflation and global growth, along with the declining prices of rice and fuel, was a positive development. However, the fall in international prices of some of Liberia's major exports, rubber, cocoa beans, and raw palm oil, was a concern for the economy. The committee also noted the rise in net remittance inflows that helped to contribute to the relative stability of the exchange rate. Now, therefore, to strengthen liquidity management and ensure macroeconomic stability, the committee unanimously resolved to 1. Maintain the monetary policy rate at 17.25% until the next assessment. 2. Maintain the corridor at 2.5 and negative 7.5 percentage points around the MPR for the standing credit and the standing deposit facilities, respectively. And 3. Maintain the reserve requirement ratios at 25% and 10% for Liberian and US dollars, respectively. The committee assures the public that it will continue to closely monitor both global and domestic economic developments and stands ready to act proactively in response to unexpected shocks in order to support macroeconomic stability in accordance with the bank's mandate. Signed, Henry F. Samoa, Executive Governor and Chairman of the Monetary Policy Committee of the Central Bank of Liberia. Thank you.
Thanks very much, Governor. Now is your time, and I'm encouraging all of our stakeholders to give us feedback, having listened to Governor Samoa's reading of the Monetary Policy Communique we encourage you to engage, actively share your thoughts, and give your own insights. To do that, you will just raise your hand, give us your name and where you're from. You'll be recognized by my colleague over there. So now is all your time. We will particularly welcome comments, feedback from financial institutions, private sector representatives, civil society, and the academia, as well as the media, in that order. So, any feedback from any representatives from financial institutions? We have one already.
Honorable Governor, our Honorable Minister, and other executive of the Central Bank, we thank you for this meeting. I will not repeat what the Honorable Minister has said about you. I've been around here for a while. I always joke that this is my third administration in Liberia. And when it comes to governor also too, how many governors are there? You are the fourth one now. So what I'm saying is before now, we are not called to this kind of meeting. We just see a memo from the central bank saying that the MPR rate is this, or these are the decisions on reserve requirement. But since you've taken over, this is the second one if I'm not mistaken. And it's a good sign that you actually consider us in taking your decisions. And you carry that along, not the one that we hear from the news that MPR rate has been changed, or the cash reserve has been increased or not increased. At least we are one of the first persons to hear whatever you're doing. I took some notes when you were making your opening remarks on the switch, digitization, perhaps dollarization, the dollarization of the Liberian economy, and cash-like policy. These are some of the pain points that you are one of us, so you know where the shoe pinches us more. All what you mentioned here are key, and I was happy when the Honorable Minister said the timeline for the switch coming on board, you managed to get it closer. I remember when we had the meeting on the switch here, and they said 2026, some of us almost passed out. That's okay, we still have to wait on the 2026 to be able to do this. This is something that we have today, like the Minister said. It will remove a lot of redundancy from the system. A lot of redundancy. Just even sending a check for clearing, counting cash, doing all those things is a lot of redundancies. Online real time is what everybody is used to in every geography that we've seen that are very progressive. So if it's something that you can get done tomorrow, we will really be happy. When I tell people that we don't have a suite, they ask, how do you operate? And you tell them, just yesterday, my CFO was just asking me that, so how do we do transaction? I have to explain to him, even if he was shocked, it's from Gambia. And he's shocked that, how come? For the check, you take your card to another bank, the check has to go outside of the country, then come back again. So, the other one is digitization. With the high cost of processing cash, printing new cash or whatever, I think it's something that we need to look at seriously. And this can only happen by way of the central bank coming up with some of the policies that may appear as revolutionary. Revolutionary in the sense that it's going to cause a shock in the system. You made mention of cash light. We have to. The only way people will be forced to use the digital means of doing transactions is when there is a consequence for continuing the old ways we are doing things. You have instances today where a customer will come to your bank and they will tell you they want $500,000 cash. Even America that uses the cash printed there, you can't walk up into a bank and say I want $500,000. And they start using this as a measurement of how efficient one bank is to the other. They will tell you if you go to bank A, they will never have money. I say me too, I will never have that kind of money. You have to give me time. So they start pitching you against each other, telling you that one bank, and it creates a lot of redundancy. We are lucky in this environment where incident of robbery, in terms of security, Liberia is very safe. So when people know that you have that kind of cash sitting in your vault that can come in tomorrow morning and be able to withdraw 500,000, you're already announcing to them that I'm a candidate that you can come and rob. So we need to combine these two together. In as much as we are pushing for digitization, we should be looking at policies that will drive people such that it's not voluntary compliance. I come from Nigeria. I remember when they started it, we thought it would never work, but it did. They went further again to say that you cannot even write check that is more than 9.99. Meaning that any amount above 9.99, you must do it through electronic means. And that has really helped the system. It also helped in terms of corruption. So you can trail where the payment is coming from, where it's going to. As it is now that you have people coming to the bank for collect cash, you don't even know what they're using the cash for. So these two for me is critical. The other one is the issue of PAPs. Today, PAPs are having a limitation on it. So it's counter. And the reason why this is happening because of Liberia is a dual currency. So you have instances where, because it's central bank Liberia, meaning that you have to do Liberian dollars. People have US dollar with them. They have to first convert it to Liberian dollars before now transferring it out. By the time you start having that conversion to Liberian dollar first, you first lose some money. On the other side also, they are going to use the buying rate of the US dollar, because you still have to convert it back on the other side. So you are having this reluctance coming in respect to cash. Where in the other countries, Liberia would have been advantage, and I can understand where it's coming from. We've taken this up severally with some people. But they still tell you that the mobile money, you can transfer your US dollar. Why can I not transfer US dollar on PAP's platform also too? We've taken it by PAP's, and the understanding is that it's coming from the central bank, specifically it must be Liberian dollars. But a lot of our customers today, if you look at the money in circulation, even in most banks, you have over 80% of our deposit in US dollars. So if you have to use Liberian dollars for PAPs, that means that you must first convert from your US dollar to Liberian dollar. And on the other side also, they have to use that buying rate. So you have instances that we've tested some transactions where you want to transfer, say, $2,000 to Nigeria. By the time you convert it, you find out that you have to do $2,300 for you to be able to get that 2,000 equivalent on the other side. Just simply because of you have to move from one currency to another currency to another currency back to the currency on the other side. So I think it's something that we have to look at. Have that flexibility such that if I want to do my transfer using US dollars, I don't have to first convert it to Nigerian dollars before. With that said, I'm giving you the assurance of the Bankers Association. You have 110% our support. We are conjoined teams. I will not be part of the conjoined. You know that the conjoined teams have two sides to it. One will be more active, one will drag the other more. We can assure that we will not be the one dragging you, but rather we'll be the one pushing you to be able to achieve whatever you want to achieve. So thank you for this, and I'm really happy with your presentation and all what you. I see that most of the resolution will still remain the way we are. The economy has been stable. I can give it to the central bank in the last 3 months or thereabout. At the beginning of the year, there was anxiety when the rate was just going up. But I can say from April to now, it's been stable. Rate has stabilized to that extent. So that anxiety that will cause panic for people to start speculating has been removed. So thank you so much with you and your team, and we'll continue to have more collaboration as we go forward. Thank you.
Thank you. Thank you. Thank you. Mr. Olalekan is the head of the Liberian Bankers Association and also CEO for Loan Bank. That's a dual position. So he deserves.
President for life.
He deserves. so he deserves the extended comments. But beyond that, I'll advise that you put up your hand and try to be brief in your comment. The only exception was the head of the Bankers Association and the CEO for Bloom Bank.
Okay, thank you, sir. taking into consideration what you just said, I will give what is going to be a summary of the summary of what I intended to say.
No, sorry.
But on a serious note, like the minister mentioned, I too am a product of the central bank. I got recruited into the central bank directly out of college about 22, 23 years ago. Like it was as a junior bank examiner. And the reason I'm mentioning that is because of the fact that for all the years I was here as a member of the central bank staff, going up from a junior examiner up to the level of director until I finally left about 2 years ago, I do not recall a meeting of this sort prior to your ascendancy as the governor of the central bank, where monetary policy decisions were not just announced, but the level of introspection and deliberation and wanting to make a decision was laid out there for the public to hear. And that tells us, and that speaks to what the moderator said earlier, when the intention of this meeting is in the interest of transparency. And not everybody across this table is going to agree with the rationale that you laid out. But the fact that you did, and as eloquently as you did, suggest to them or should tell them that these were not decisions that were reached lightly or arbitrarily. That you consider confluence of factors in arriving at the decisions that you did. And that for me is perhaps the biggest takeaway of this discussion. In addition to everything the president for life of the LB has mentioned, he keeps wanting to toy with me, stuck with it. There's one other thing that you talked about in the many factors that were considered in arriving at the decisions that you take. You talked about the NPLs, and now for the uninitiated NPLs and non-performing loans. That is of course an issue that seriously is dragging the banks down, especially with government. So the current interest rate ratio is about 26%. For some banks, that's a number to aspire to. 126%, which is 16% above the minimum tolerable limit, is a baseline on its own term. But for some of the banks, that's a number they even aspire to. If I had 26%, I'd be so much better off. And the reason I mention that is because there are so many actions that can be taken as a group to address this issue, rather than allowing the banks to work, and not just the central banks allowing the banks to work on their own, but there has to be concerted efforts from all sides of the spectrum to approach this issue. While the banks are taking the steps that they've taken, there are also obstacles with respect to other stakeholders that impinge our ability to achieve the objectives that we want to achieve. For instance, we've mentioned ad nauseam the problems we've had with the judicial system with respect to resolving non-performing loan issues. That's something that has to be tackled like yesterday. Because while we take the efforts that we take and push the delinquent customers, and now delinquent customers are not, some of them are not delinquent because they choose to be, but because of the circumstances they face with, and those who understand we can work with. But there are some of them who deliberately refuse to pay off of facilities. Like I see the customers I'm dealing with right now. One of them has been coming to the bank for the past 5 years with one manager's check. The check hasn't changed. So the same check. And he comes to the bank every time and says, I want to pay off 50% of your outstanding interest if you waive 50% of my outstanding interest. We'll try to work with this customer to come to an amicable solution. What we agree with the proposal, let's sign a restructure agreement. This guy keeps the can falling down the way every time we have an engagement. And I suspect the reason he does this is because he thinks that when we finally resort to legal remedies, that's going to drag through the court system for a long period of time. At some point we get discouraged and say, you know, let him go. So while we're making the efforts we're making to drive them towards compliance, there also has to be concerted effort for other stakeholders to also complement the bank's effort in achieving the collective goals that we set for ourselves. No economy survives without a strong banking sector. We saw in 2008 the global financial crisis emanated not just from the banking sector, from a small portion of the banking sector, the subprime market. And that issue cascaded across the world and brought the entire world to its knees. But we saw major financial institutions going under. Fannie Mae, Mac, or what's the name of
Lehman Brothers.
Lehman Brothers, one of the biggest investment houses in the world, collapsed because of that. That was a crisis that emanated from the banking sector. That's just a simple point out to you how important the banks, how pervasive the banks are to the banking sector and the overall economy. So if the banking sector is not as strong as it should be, it undermines the economy ability to grow and achieve the objectives that are set for it. So the issue of non-performing loans has to be seriously looked at from a variety of instances. And this is where we need to have all the key stakeholders on board, and we can have a meeting of the minds as to how to attack this situation once and for all before it has the ability to affect on the banking sector. So those are the two issues I wanted to pick up on. The issue of transparency that was mentioned earlier, and we appreciate the fact that this is done. And we hope that this continues. Like I said, not everybody across the state is going to agree with the rationale you laid out. But in fact, you laid out so succinctly tells us that these are not actual decisions. These are carefully considered decisions, and we arrive at that point. So thank you very much, Governor, for having us here.
Thank you, Dr. Allison. Can we have one more, at least one more?
Yes, I just want
Okay, so from a financial institution?
Yes.
So we can have one more comment question from a financial institution before moving on to private sector representative.
Thank you so much, Governor. Just in addition to what my more senior colleagues have said, there's a specific. I'm Abraham Johnson, and I represent Mr. Robert Jones, who's the CEO of African First Bank. There's this specific aspect of the banking industry that I want to raise, since it impacts how the pressure on the U.S. dollars. That has to do with the way we look at outgoing transfers and incoming transfers. For now, we have, for example, I have a customer who wants to bring in something around $8 million a week, and to bring that money in, the requirement from the central bank, if I to use the central bank to bring that money, I have to pay 0.75%. 0.75% to bring that money to this country, and I mean to repatriate the fund. And to set our money, we give it a range, flat rate for like $50, $150. So what that tells us is that to set our money is easier than to bring money into the country. And I think there needs to be a broader conversation from the NPC as to how this can be treated in a way that encourages funds to come to the country, which will have a very good effect on the pressure on the exchange rate. So I just thought to raise that in addition to my colleagues, my senior colleagues. Thank you.
Good morning. So I'm Newman Sai, the president of the National Association of Corrections in Liberia. Thanks today for this meeting. First of all, I must commend you for leadership. Being notable and appreciated by many of us in the sector. So, with that said, I would like to raise a few concerns. One, when will the Central Bank of Liberia, under your leadership, engage with key stakeholders to find a concrete and lasting solution to the ongoing exchange rate challenges we face with now? We are not necessarily calling for a fixed rate, but we rather for proper regulation and consistent oversight that will help manage the stability in the market with suitable way. So my question, we all know that our people do not understand policy or rating and statement, they don't understand it. different actions. So, we, as it stands now, the National Institute of Foreign Government will serve as a key stakeholder or a bridge between the central bank and the informal sector. However, since the ascendancy, we have not had any formal engagement or dialogue in addressing the practical challenges we are faced with in the foreign exchange market. This dialogue is essential so as to responsibly, when can we as stakeholders sit with your team and you to chart a coordinated pathway to ensure, second, to ensure a sound regulation and the market stability is ensured to serve our people. Thank you.
Thank you, Mr. Sai. Let me begin with the second concern of engagement. I want to assure you that only this administration will engage with you. So consider that in the month of August, after the festivities, we will engage with you. Our commitment, we came in here with a commitment of engaging with all the stakeholders. So we started with the Insurers Association. We moved on to the banks. In fact, with the banks, because of their critical role, it is a quarterly engagement that we normally have with the commercial banks. So the next engagement is now being planned with the Bankers Association again. But we can assure you that NAFIBO will be meeting with you. So please take note of that, and let's arrange an engagement with NAFIBO. On the exchange rate, so this is what we're doing as a central bank. During our confirmation, we were asked a question on how we intended to tackle the issue of exchange rate. Firstly, the economy, it's a liberal economy that we have. And so one of the ideas that we floated was to encourage the repatriation of proceeds in country, export proceeds. And once we have those coming in country, what will happen is that the system will always have excess liquidity in terms of US dollars, and that will support the exchange rate. And so we started that conversation. That conversation has gained steam. It has been taken up by the Senate. The Senate now has a draft bill. From discussions, the House of Representatives is also anxiously waiting for that. At the level of the EMT, the recent meeting chaired by the Honorable Minister of Finance, it came up and it received a resounding acceptance. So we are working to be able to address that. Now, bringing all stakeholders together, we must have a solution that we can proffer, because you'll be asking us, how do you intend to address this? The issue of the exchange rate is a supply and demand issue that you have. So when you have a low supply of US dollars, obviously the local currency will depreciate. If you have a higher supply or demand for local currencies, the local currency will depreciate. So what we are trying to do as a central bank and as the government is to enhance the supply of US dollars in the local economy. And the way we think that we can do that without going against our international partners in terms of capital control is to implement a repatriation of export proceeds. Those export proceeds will be repatriated not through the Central Bank of Liberia, but through the commercial banking system. They will come through the commercial banks, and once the commercial banks or the commercial banks have excess US dollar liquidity, they will be able to intervene in the market at a relatively short period of time and at low cost to those who need the FX to facilitate their inputs. As we indicated earlier on, the Liberian economy is an import-driven economy. So what we presented to you was a trade deficit, because we are importing more than we are exporting. And so the demand on foreign exchange is really, really high. But again, in collaboration with our fiscal authorities, we're able to stabilize the exchange rate, because we saw it immediately after the holiday season, the Christmas season, when the exchange rate just started moving, because there was a huge demand for FX to restock, and so that drove the FX or the rate exchange rate up. That's depreciated in the local currency. That's quite stabilized. We're engaged with the fiscal authorities, and there are interventions that are being made in terms of how the fiscal authorities also intervene in terms of paying, be it contractors, be it vendors, and also, like you say, working with the Liberia Bankers Association to be able to attract, to address this particular situation. So we already have, as a government, as a central bank, we already have identified a pathway to addressing this particular situation. But again, it takes time. It's a process. It's not an event, and so we are now going, through this process, and we are hoping that as soon as possible we can have this bill enacted, and then we as a central bank will now come up with the regulations and policies in terms of how we can address that particular situation. Also, just to go back to the comment made by the president of the Liberia Bankers Association in terms of PAPS, I think Miata is not in the room. We need to engage with PAPS to be able to address the situation of moving money on the PAPS platform, both local currency and the US dollars also, so that the losses sustained by individuals who are using the platform will not be at a level that discourages them from using the system. So we'll be engaging with PAPS to see how that can work. But what we also want to do is to continue to encourage your clients for the use of the PAPS platform, because it helps to lower the demand for FX currently, especially for those who are generating huge revenue in local currency. So they don't need to go to the market to buy FX in order to facilitate their invitation. So we will continue to work. It's a moving target, and we'll continue to work with all of the stakeholders to make sure that we can achieve that objective. But Nafibo, we're coming. We'll meet with you. We'll hear your concerns, and we'll all sit together to see how we can address those concerns. Thank you.
Thank you, Governor. Nafibo, I know that's good news for you. So, can we have someone from the private sector?
Yeah.
The president,
Of course.
Thank you, Governor. I think I want to.
You are.
My name is James M. Strutter, the president of Liberia Business Association, or short LIBA. I was the Vendor Association. I've said that, they just said that. I know you for the grassroots. I know what you stand for. I know it was not a mistake when the president appointed you here. I know there's going to be a lot of changes taking place. And I want to say I want to commend you and your team for the work well done. But there are a few things I want to bring to the table. The business people will be very happy to see what rates is eased at a point like the payment system that you are bringing into the system. Like we are beyond, Liberia is beyond everything that we're discussing. And so like when you are talking about it, we're like, can it be today? Because we want to see the safety of our people going out there on the border crossing issues. The second thing is there are issues that have to do with no performance loan that the LBDI boss have just spoken about. I think there is a reason why we need, like the request is made. I strongly believe there is a need that we sit on the table and look at the issues that created these things. Because our factors are creating what we're talking about. If we do not deal with the factors, we'll always see ourselves going the way we do. This is a small country, a small economy that can be handled. But there are factors. If we do not look at it, we'll always be basing them out. But I want to say thank you because the engagement, it tells of volume. That our people will be aware of the situation that is going on. Because as I leave your office now, I will be talking to my membership and then telling them what we anticipate to see coming out tomorrow. But if you just give up a documentation, the next day we see an order coming out, it's a Central Bank say, everybody, hey, why Central Bank have to do this? But once we come to the meeting, the stakeholders sit and listen to it, and we go and share the information before the issue can be out there. I think they'll be okay. Thank you very much, and we appreciate it.
I want to give us a
I just wanted to make a comment on the payment system. So the payment system is working. Yes, it was moving at very slow or snail pace when we got in here. And we had to push the snail to move a little bit. And in doing that, we had to, shake some, grounds, and, people were a little bit kind of offended by the approach that we took, but we thought that we needed to take that approach. And so it has gotten some level of acceptance. They're moving with us. In fact, I'm going to check that I have a meeting with the World Bank country manager on Thursday, and we're going to be discussing the payment system because the project is actually being supported by the World Bank, and so we are moving with that. Also with the AFDB, we are moving with the upgrade on the ACH, ACE, and the RTGS. That exercise is also ongoing currently. The president did mention the issue of check clearing. In fact, I've asked my banking department to give me a schedule for when we can start all manual clearing. That we have to move to full automated clearing. So I asked them to come back to me with all sort of excuses, but I'm saying I'm not going to accept any excuse henceforth. We have to move to full automated clearing. Whatever the challenges are, we have to resolve those challenges and we can move to full automated clearing. So one of the things that we decided to also take out of the payment system ahead is we're working with the two MNOs to integrate them so that transactions can be performed on the network seamlessly. So you don't have to have